Okay, so let's get into the nitty gritty here.
Yeah.
What this video is all about.
Absolutely.
Tell everyone out there, for those that don't know, exactly what is title insurance. What's up guys, Nick here, and I'm back with another video. In today's video, I'm holding a special interview for you guys, talking to Mr. Ryan Orr of Ticor Title. You're not gonna wanna miss this one. It's gonna answer all your questions about title insurance, so stay tuned. Let's do this. All right, so hello everyone out there on the YouTube live. We are here with Mr. Ryan Orr of Ticor Title, and we're gonna hold a little interview style video of exactly what is title insurance. So for those of you that are tuning in live on YouTube, feel free to type up some questions there, and if we get to seeing your questions while we're filming here, we'll try to answer them live.
Absolutely.
Without further ado, Mr. Ryan Orr, thank you for being here.
It's good to be here.
Yes, appreciate your time.
My pleasure.
So to get it kicked off here, wanted to just kind of go over a little bit of background on yourself and basically what you did before title insurance and how you got into the title business.
Well, that goes back a little ways. I've been in the business since 2002. Got started basically by dumb luck, to be honest. I was working for Enterprise Rent-A-Car after I graduated from college at the University of Laverne, and I had done a couple transactions and with the same escrow officer. And I think it's like many great things happen. They happen by relationships.
Right.
And they happen by being able to connect with people. And so I got an opportunity because an entire sales force literally had left and gone to another company. And so was able to see another opportunity. And when I got into the business, it didn't take long to start succeeding within the business. I quickly started learning that sales is the highest paid hard work and the lowest paid easy work. And I think that the thing that attracted me to it the most is the fact that nobody could tell us what we're worth at the end of the day.
Right.
That our efforts and our actions and our heart will shine through in any kind of sales position. And we just got to put the reps in each and every day, try to help others.
Yeah, absolutely. I love that. So the transition from what you were doing, you said Enterprise, right?
Oh, yeah, yeah.
The transition from that to title, was it smooth, kind of the same feel, or was it a completely different thing to where you were just kind of going in fresh and not knowing anything?
It's completely different. There's really no comparisons. I mean, when I got involved with Enterprise Rent-A-Car, it was fun out of college, but it's totally different. You're locked into a specific salary. We're told that this is what you're supposed to do and this is how much you can potentially make. And I think in any form of sales, this being one of them, it was one of those things where I knew that I was going to make more money each month based on this new opportunity. And even if I didn't like it, I'd still have an out. I'd still have an opportunity to find something else. Okay. I found myself locked into that schedule. Yeah. What I did put to use is the fact that when I was at Enterprise, we had to run our own P&Ls, we had to manage our people and our time, and so some of the leadership skills that I learned through college and then transitioned into Enterprise really came in handy in this part of our industry, because we have to be dedicated, we have to be disciplined, and when we put those hours in each day and learn, continue to grow, the good stuff follows through.
Yeah, so when you were mentioning dedication, it's not a 9-to-5 salary type job where you're getting paid even on a sick day, right?
Well, we don't really have sick days. We don't have lunchtime. We don't really have those items.
Right.
With freedom and flexibility comes a ton of responsibility. So be it selling real estate or doing loans or anything in the sales field, you're on call pretty much 24/7.
Right.
And that's one of the things it's a blessing and it's a curse. The reason it's a blessing is because so many people refuse to put the effort in, refuse to do the follow-up, refuse to continue to know and grow and learn. And in this industry, you absolutely have to be committed to that.
Yes. Yep. Absolutely.
So,
yeah, there's no just getting by, right? It's hard work, it's dedication, it's at the end of the day, it's a hustle.
It is.
Yep.
My favorite saying when people talk about it is that sales is the highest paid hard work or the lowest paid easy work.
Yeah.
You choose your paycheck at the end of the day.
Yep. Absolutely. Love it. You got into title, you noticed it's hard work, and you've obviously done well there. You are now, correct me if I'm wrong, What is that? Your actual title?
Title is vice president.
Okay.
Yeah.
Vice president.
Based on years served and level of production, you get assigned a title.
Okay.
But at the end of the day, it doesn't really matter to me anyways. My thing is about helping people and helping our clients win. And when we do, our paycheck and our titles will continue to reflect that.
Okay.
In the last, 4 or 5 years, since I've been back full-time in production, we've been able to get awarded with top 5 and 10% in the nation for all Fidelity brands nationwide. Nice. So it's a pretty premier club to be able to be involved in, and we're just grateful for those opportunities to be there.
Awesome. Good. Congratulations on that. Okay, so let's get into the nitty-gritty here, what this video is all about.
Absolutely.
Tell everyone out there, for those that don't know, exactly what is title insurance.
Title insurance is a product that does all the investigative work on a real estate piece of property. Title insurance is involved with the sale or transaction on real property. And so when it comes down to it, if I'm trying to describe it or make it very simple, I always use my hands. I pretend like I'm Italian, and I talk with my hands. And I say that this represents today, the date of closing of this real estate transaction. This represents the past, and this the future. And so in looking at this, the role of title insurance is to make sure that the past doesn't come forward and haunt you in the future. Yeah. And then people might ask, well, what might haunt you? Well, there's a list of a ton of different items, but some examples could be ownership, encroachments, easements, mechanics liens, divorce, bankruptcy, just to name a few, abstracts of judgment. And so these are things that come into the real estate process, and it's our job to identify anything and everything that will affect the ownership of that property so that it's either addressed or known about before the new owner takes possession.
Got it. Perfect. So to kind of break that down, in a transaction scenario, we have a buyer that's buying a home, and this owner could have things that have happened while they lived there.
Correct.
That may affect the new buyer.
Correct.
And what you guys do is kind of get all that up, surfaced, bring that to the surface for the buyer to know about, and for the seller to actually take care of prior to the transaction closing.
Absolutely, yes.
Okay.
Yeah.
So that way the buyer walks into a clean slate. Nothing's going to, like you said, come back to haunt them in the future.
Correct. So when that happens, there's 2 different policies in most real estate transactions, most real estate sale transactions. Typically, there's going to be an owner's policy paid for by the seller and a buyer's policy that they buy, which is also known as a lender's policy. And that's only if they have a loan. If they don't have a loan, then there is no policy for the lender's policy on that one.
Okay. So the lender's policy obviously protects the one loaning the money. The bank.
Correct. Yeah, so the sellers are paying for the policy protecting the new homeowner who's coming into the property. The buyers are paying for the policy to protect the lender's interests and or their position on title.
Got it.
Correct.
Perfect. Okay. Awesome. And then, so basically, you kind of covered this next question. Title insurance, it covers the buyer and the lender.
Yes, correct. The new owner, we call it the owner's policy.
The new owner, right.
And then the lender, if there is one. Again, if there's not a loan, then there's no lender's policy that would be issued at that rate.
Okay, got it. Now, how's YouTube Live looking out there? Do we have any questions or anything? Is there any viewers? Okay, awesome. 30? Perfect. All right, so next question. Are title insurance prices regulated?
Yes.
Okay.
Absolutely.
Okay.
We have to file our pricing with the Department of Insurance each and every time. And so that's part of a predicament that's different from where it used to be in the past. Previous to SB 133 in California, if there was adjustments that needed to be made, we could from time to time based on situations.
Okay.
But in today's marketplace, all of our fees are locked into what we call a rate calculator. And the rate calculator does it based upon the type of transaction, the liability amount. I keep doing these like little air parentheses, but we'll just keep going with it. The liability amount would be the purchase price and the loan amount. And so it's on a tiered schedule based upon that, as well as, is this a regular residential transaction? Is this an owner-occupied, a non-owner occupied? Is it commercial? So there's going to be different variations in the schedule where policies can fall.
Gotcha. Okay. And who is in charge, or who is responsible for paying for these policies?
Typically, the seller pays for the owner's policy and the buyer pays for the lender's policy. That's what's most customary in California. It's different in different states. And remember, this is a sale transaction, so everything is negotiable in the market that we're currently in.
Okay. Meaning between the buyer, seller, and lender.
Correct.
Not between the seller and the title company.
Correct.
Okay.
Yeah, typically it's just the buyer and seller determining as to who's involved in this transaction and who's going to pay for what.
Yeah. Awesome. Okay. Perfect. So how much coverage for anyone out there that's maybe in a transaction right now, buying a home, or in the future, obviously going to purchase a home? And I know this is probably, you guys kind of maybe handle this for the buyers or for the new owners, but how much coverage typically should they get? If there is an amount of coverage or a tier or anything like that.
Right. Well, really, it's not about the amount of coverage. It's about the type of policy that's going to be issued.
Okay.
The owner's policy that most everything defaults to on most transactions, on owner-occupied ones, are what we call our extended policy. And so it has the most amount of coverages that are available to any homeowner on that transaction. If it's a non-owner occupied or units, that extended coverage does not apply. And they're only going to get the coverage that they need.
Got it.
So it's only going to be based on the liability amount. And when I use the word liability amount, it's because when we're issuing a title insurance policy, we're responsible to back our policy to the full value of that house, should anything come back up. There are some coverages that do go slightly above the value of that house at the time of purchase. So we're not going to sell you a policy for $1 million when your purchase price is $385. It's going to be based on the $385 number. And many of our extended policies now actually have forward coverages after the date of close. Before, it was always date of close backwards, which is the primary source or primary function of our policies, but some has coverages that do go forward as well.
Okay. Great. So a question just came up in my head that I didn't write down, and I probably should know the answer to this.
Yeah.
I sell real estate, so I probably should know this. But I've only dealt with it a couple of times, so it's kind of left my mind here. From what I remember, there is a type of coverage, and it deals mostly, or it applies mostly to investors that may be flipping a home.
Correct.
What is that called?
It's called a binder policy.
Binder policy.
Yeah.
Okay, so what exactly is that?
A binder policy is someone that's going to sell the property again within 2 years' time.
Okay.
And when they sell it within that 2 years, all they pay is the difference between the policy when they bought it and what the policy should be when they're going to sell it. So let's say, for example, they're buying the property and the title policy is $1,300. Then 6 months, a year later, whenever they finish a rehab or whatever the situation is, they would pay the difference. So now let's say, for example, the new policy is going to be $1,500. Instead of paying the full $1,500, all they'll pay is the $200 difference.
Okay.
In order to get this, on the buy side, they're going to pay 10% more on the owner's policy. So if it was $1,300 to start, in addition to their lender's policy that they're getting, they're also going to pay $130 additional.
Got it. Okay. So, and that difference is because obviously if someone's selling within the next 2 years, most of the time is for a profit and that price is going to be higher.
Correct. Yeah. Okay. So you pay a little bit more up front, but if you're going to sell the property within 2 years, it makes absolute sense to get the binder on it, for sure.
Absolutely. Okay. And then if, worst case scenario, the market does come down within that 2 years, they're paying less or probably not.
Yeah, they probably would have no policy at all.
Policy.
No, not policy, but no premium due.
No premium due. Okay.
Correct. Yeah.
Perfect. That covers that. So we covered who pays for the real estate or for the insurance in a real estate transaction. Now, is title insurance required in a California real estate transaction?
That's a great question. A lot of times the way I like to word this question is it required by law?
Okay.
And the answer is no. It is not required by law in order to have title insurance. However, that also being said, if anybody is getting an institutionalized loan, it could be a hard money lender, it could be a bank, it could be a broker. I don't care who the lender is. If there is a lender involved, I don't know any of them that will issue that loan without title insurance.
Right.
So if you're going to buy a property cash, you now become the underwriter of that transaction, so you can determine for you what's your acceptable level of risk and which items are you willing to allow to stay on that property after the close.
Yeah.
And in some cases, it may make sense. But in most cases, if the top investors in the world are not going to do it without it, why would you want to go it alone yourself?
Yeah, absolutely.
So,
So then at that point, if the new owner decides not to get a title insurance policy, they most of the time are aware of what is on title, and they're making the decision to say it's okay, we don't want it.
you mean the buyer at that rate?
The buyer, yeah.
The seller would typically pay for it, but the
Right.
buyer, if they're paying cash, or the lender, which I've never heard of, would allow it without it.
Yeah.
Then they can do what they want to do.
Their own responsibility for whatever may happen in the future.
You know, it's a challenge just because I think it comes up the most when you have someone transferring it from family members and they're like, oh, I'm just gonna sell this over. And then 10 years later, 15 years later, you're going to do something, or you want to get a loan on that property, or you're going to sell it. And it's a pay me now or pay me later kind of thing, because all of those things that were on that property that are still there are going to need to be resolved. And so if you don't get those things addressed at the time of taking ownership, you're just kicking the can down the road, unfortunately. So we call
Something's bound
those
to happen.
uninsured deeds or uninsured deed transactions that come up in the process.
Okay.
So
Awesome. Now, what has been, let's say, the most interesting scenario you've seen as far as something that's on title? I mean, if you can think of one, maybe two scenarios where it's been a challenge to either remove it or just something that you never have seen on a title report before that you actually did see in this case.
well, there's two or three things. There's a lot of different items that can reflect on a prelim. But there's some of the stuff that you don't see on the property itself. You see, there's two ways that liens attach to a property. One is physically to the property, and two is personally to that property.
Right.
So we may not know all the deeds and the injustices of the person themselves, but there can be all kinds of things that attach to a person's name and social security number as well. And we use a document called the Statement of Information to run the person's name and social security number. And a lot of borrowers or clients don't really like to fill this form out because it's kind of intrusive. I mean, it asks name, date of birth, driver's license number, social security number, residences, employment places. And the more common the name, the more this is really needed in the transaction.
Right.
And with proactive agents like yourself, getting these things in early avoids the last minute hiccups on the transaction. Because 9 times out of 10, when we're seeing transactions have hiccups at the end of it, it's because that statement of identity was turned in 3 days before escrow and the person had a child support lien. And even though it was current or the kids are 25 years old, I mean, that's a real big one that can come up. Oh my gosh, all my kids are 25 and 30 and 35. I haven't paid child support in 8, 10, 15 years. And so it's a common occurrence, but doesn't always come up unless we have that statement of identity in.
Right.
And so when it comes down to child support or alimony, it's one of those things that has to physically be removed, even if you've stopped paying and it's not done, because we don't know about arrearages. Oh, wow. It was the person consistent? Did they pay all their back stuff on it? And so we actually need the release from the county or the agency that was issuing that part on there. Right now, one of our biggest challenges on, for example, the commercial or construction side is we're seeing, as well as with flippers, anybody who's doing any kind of construction, most of the lenders are looking for mechanics lien coverage. There it comes again. You see, I did it.
Mechanics lien.
Mechanics lien coverage. So before the file can close, the lender asks for mechanics lien coverage. And this is some things people do and don't know. Construction cannot start before the policy or the loan is issued, before that commencement date of the closing.
Okay.
Because if they do start construction before that, it breaks priority on title as to who has the rights on it.
Right.
And for a title insurer, if priority is broken based on those items and someone files a mechanics lien and has priority over the deed of trust, well, we just had a full failure of title.
Wow.
There was some time ago, you might know about the Mission Inn. There's a local title insurance company. We'll allow them to remain nameless at this one. There were several contractors that were trying to bring the Mission Inn back to life.
Okay.
And so there was a major renovation going on it. And developer number one ran out of money and went bankrupt. Well, there was a loan on that construction portion. And this title insurance company had issued the policy. Well, the lender did some research and realized that some of the workers went in early to the Mission Inn and said, hey, these cabinets, they're just going to destroy them and throw them away. Why don't we go in there into the basement and remove all of these cabinets so we could sell them or put them in our garage or whatever we're going to do. These are like historic, right? So these contractors went into the basement of the Mission Inn at the time, removed a whole bunch of the stuff, which then started the construction process, which then led to a break in priority, which the lender, under their investigative work, found out, and they filed a claim on their title insurance policy. And this title insurance company took, I think, a $7.5 million loss because some of the contractors had gone in and started the work first.
Wow. When was this?
It's been been years. I mean, I was at the company back in 2006, and they told the story, and it was probably 15, 20 years before that.
Oh, okay.
So, but
interesting. Wow.
You think about the dollars in the 80s and 90s at $7.5 million. It's always that's a lot of money, regardless. But back then, it was even more.
Yeah.
So.
Wow. Interesting. So the title companies end up swallowing a lot of money based on things that are kind of out of their control at times.
Right. We don't take losses on every file, or at least that's our goal. We wouldn't be in business if we did.
Right.
But when we do take losses, they're typically pretty significant. And even when we take a loss on a file, when we're right, it still costs quite a bit of money to defend ourselves in the case and what's going on.
Yeah.
And so I want to say an average title policy in today's market on the seller side is somewhere between $1,400 and $1,500 on the listing or the seller side. On the buy side, the average is somewhere between $500 and $700 for the policy. Okay. 99% of the time, the seller and the buyer use the same title company because it's a huge discount to use the same company. They pay about a third the price on the buy side that they would if they tried to do it separate from the owner's policy.
Okay, good to know.
Yeah.
Good to know.
Oh, in regards to the whole case with the break in priority, where is that coming up into play right now? It's heavily coming into play with investors. There's quite a few hard money lenders and others that are doing construction financing, and they're doing rehab financing. So if they're going to renovate a house and flip it or whichever, and there's some kind of holdback accounts where they're going to fund the construction portion of it, when they ask for the mechanics lien coverage, we send an inspector out to the house the morning of, or the property or project, the day of closing before we'll record that file, just to validate that construction hasn't started.
Wow, okay.
So, but that's one of the biggest things where we're seeing the mechanics lien coverage and the challenge come up.
So that's not just with new builds, it's with rehabs, flips, all that kind of stuff.
Has to do with the construction loan.
Any construction loan.
Yeah, construction loan where, for example, in this case, where the bank or the lender is asking for mechanics lien coverage specifically.
Got it.
Yeah.
Okay. Good. Great information. So that actually covers all my questions regarding title, and I hope that helps you guys out there understand. That was actually a lot of information, but a lot more of what title actually entails. Is there anything that you feel we missed, or anything that may come up or comes up often that you would like to talk about?
The only other thing I would say is that consulting some of the documentation when it comes down to vesting and the implications thereof. Vesting is also another name for how you hold the title of your property, because there's some pretty huge implications, and neither he nor I are tax attorneys. You're not a tax attorney, right?
No.
Okay. Yeah, no, I'm not a tax attorney, nor do I play one on TV. But there are some huge implications in regards to how you hold that title. The two biggest one are how you can split the property and what happens upon death. And so you want to make sure you know those, and we do have some support materials for you to see that. Okay. I just think people work so hard to invest in properties or their house, and I love this country, I love Uncle Sam and so forth, I do, but I really don't want to give him a penny more than he needs or deserves. And so I'd rather have that stuff to go to my family and not necessarily for taxes and or because I didn't plan accordingly.
Right.
So be it with right of survivorship or holding a property in a trust is heavily advised just because it avoids future confrontations, and should the unexpected happen, you're prepared and your family, without having to go through courts or conservatorships or probate situations, can address those things. Yeah. So estate planning, knowing your vesting, what is the difference as to how you can do it for both taxes as well as for inheritance should something happen to one of the owners of a property.
Okay, good. Speaking of that, Vesting. Let's do a quick rundown of how they should take their vesting when purchasing a home. Or not how they should, because obviously every situation is different, but the different types of vesting that they can hold title.
There's 5 or 6 different ways. There's tenancy in common. There's community property, which is reserved for married peoples. There's tenants in common, joint tenancy, community property. Those are the 3 main ones. There's not one that's going to be specific that's the best. It's going to be what's the best for your scenario.
Right.
If it's husband and wife, I like the idea of joint tenancy. I really do, because it has inherently right of survivorship, meaning that the property transfers to the surviving person on title. Mm-hmm. But as I've been learning, and life does change, and family matters do come into play. Right. In my family, for example, my dad passed away. And my mom has since gotten remarried, and she's now remarried with another gentleman, and good for her. Go mom. But at the same time, if there was a family property that was there and she goes joint tenancy, and something happens to her, hers and my father's potential estate then goes to this gentleman that's been in the picture for a year. I mean, things you just wouldn't necessarily think about up front. Right. You might want a different strategy as to what it is, and that might be the way you want it to go, but these are some of the things we don't necessarily think about if the situations don't come up.
Got it.
So it all comes down to estate planning, and I personally believe that holding properties, if you can and or can't afford it, and if you need referrals on those, there's some people we work with all the time for estate plans.
Yeah.
When you get family and you get money involved, it's amazing how ugly people can get at times. And if you have an estate plan, at the end of the day, it literally will itemize out what's supposed to happen in each step of the game. And you take that guesswork and you take a lot of the potential challenges in fighting away from the family. Yeah. So, because then your wishes have to be followed through.
Right.
The trust and so forth becomes a legal entity that holds those pieces in it. And there's specific instructions for each. Right. So whatever your wishes are, nobody can guess at that point, because it's all detailed out as to what's supposed to happen.
Yep. Documented and plain as day.
Plain as day.
There you go.
Yeah.
Plain as day. All right. Awesome. So that explains a lot, and definitely appreciate it. Appreciate your time. Hopefully this helps all of you guys out there. YouTube Live, and this video will also be posted on my YouTube channel. And I could send it over to Ryan as well, post it on his YouTube channel. So speaking of that, how can everybody out there find you, Ryan Orr with Ticor Title?
That's right. So you can find me on any of the social medias, really, just by searching my name, Ryan J. Orr. And the website's teamtitleguy.com. So teamtitleguy.com.
Teamtitleguy.com. And you also have a YouTube channel?
We do, under my name, Ryan J. Orr.
Ryan J. Orr. We'll post the links below. And thank you guys for all watching. Ryan, thanks again for stopping by.
Much appreciate
your time. So, if you guys have any questions, YouTube Live, or if you're watching this video on the replay, post your questions in the comments. We'll get them answered as soon as we can. And we will also post links in the description below to Ryan's social media accounts, his YouTube channel as well. And with that being said, we'd like to wrap this up, and thank you guys for tuning in and watching. This is actually the first episode of our What Is series.
What is?
Congratulations. You're the first interview for What Is, and in today's episode, we're talking about what is title insurance. So
it is.
Anything last to say?
Title insurance is what it is.
It is what it is. We'll leave it at that. Awesome, man. Thanks again.
My pleasure.
All right.
And you think you need to add like a...
Oh, the mic wasn't on. Just kidding. Imagine.